GAAP is often referenced in contracts. Do accountants have to follow GAAP?
So public companies have to follow GAAP. Private companies, may often follow GAAP, but they don't necessarily have to. A lot of times in contracts, I'll see references to, when I say contracts, I mean company agreements, that the financials must be maintained in accordance with GAAP. Well, you could do an annual audit to make sure there's no departures from GAAP. There's ways you can ensure as a business, if you want to include that in your company agreement, that the financials are GAAP financials. Oftentimes, though, you may also see non-GAAP measures used by companies. For instance, EBITDA is often used in assessing a company's performance, and that's a non-GAAP measure. So, you don't have to follow it as a non-public company, but we do regularly see that kind of guidance is there in company agreements that suggests that a company follows GAAP. But if you ultimately want to know, hey, is this company following GAAP or not, you're probably going to want to get an audit done.
I can chime in on that. As I said earlier, I love to get audited financials or reviewed financials because they're going to be in accordance with GAAP. You do have the footnotes. That's really a rarity in the work we do. And a lot of the businesses that we get financial information from, sometimes they're just compiled, put together by perhaps an in-house controller or CFO or by outside CPA. But a lot of the work we do is looking from a valuation and litigation support perspective, is looking through the financial information and the accounting information, I should say, looking through the accounting to get down to cash flow. So it's really understanding the data to get down to free cash flow and some of the metrics which Rubik referred to, such as EBITDA, earnings before interest, taxes, depreciation, and amortization. Very common metric in the valuation world, albeit it has nothing to do with GAAP per se.